First of all, I want to start about talking about water, Thames Water. And I want to know if you feel the water and sewage needs of some 15 million customers are being held to ransom by a group of shareholders more interested in profits than cleaning the poo out of our rivers. Yes, I want to talk about the scandal that is our privatised water industry as Thames Water edges ever closer to going down the toilet. Owing some, 15 billion, some of the papers are saying 17 billion, thanks to its ruinously complex corporate antics. Last summer, a rescue plan was agreed with shareholders, which include a Canadian pension fund and China's sovereign wealth fund, that would see them pump £750 million into the stricken company, the first £500 million of that due by the end of next month. But shareholders then announced a massive reverse ferret the other day and withdrew that lifeline after the watchdog Ofwat refused to bow to their demands for concessions, which essentially means a massive hike in bills for customers. The shareholders have called the Thames Water situation uninvestable. I'm not sure that's really the major issue that we're all facing at the moment. This prompted the GMB union to accuse shareholders of blackmailing customers and Ofwat. The GMB National Officer Gary Carter said that instead of putting the money in to fix the problem, shareholders are refusing to pay a penny unless bills rocket. Thames Water requires a further £20 billion before 2030 to fund its investment plan and maintain assets, i.e. stop pumping sewage into our rivers. We're told it's got enough to get by till May next year, but there's already talk of Thames Water being renationalised. The chances of that, well, I suggest depend on the £850,000 a year chief executive, Chris Weston, persuading the powers that be that a 40% hike in bills will actually fix things.
We're dealing with a changing climate and a population growth, and all of that drives the investment that we absolutely have to do to bring our network up to current standards and in line with expectation of our customers. The plans that we have put forward require an investment of around £20 billion in that 2025 to 2030 period, and that would result in a bill rise of around 40%.
It's extraordinary, isn't it? There was no mention there of Thames Water shareholders taking billions of pounds, £7 billion out of the company since it was founded in 1989, borrowing money in order to do it, when it was cheap to borrow money now they're struggling to repay. And yet it all seems to be the consumer's fault. And ahead of researching this ahead of today's discussion, I was drawn to a quote from a Victorian statesman called Joseph Chamberlain, who was one of the key players in persuading government to essentially nationalise water companies, to take the control away from private ownership. And he said in 1884, and this just says it all really to me, "It is difficult, if not impossible, to combine the citizens' rights and interests and the private enterprise's interests, because the private enterprise aims at its natural and justified objective, the biggest possible profit." And I can see his point, because aside from failing to stem a never-ending flood of sewage into our rivers and seas, Thames Water has this debt, 15, 17 billion, depending on which paper you read, in part because it felt it was doing so well over the years, it could afford to pay £7 billion in dividends to shareholders. And £7 billion is almost exactly what Thatcher sold the UK's entire water industry for back in 1989. For those of you that were too young to remember the sell-off of our utilities back in the 80s and 90s, we were told all the time that we needed to privatise these companies to provide a cheaper, better service. How's that working out for us, do you think? Have you looked at your energy bills recently? Do you feel you're getting a cheaper, better service? What about British Airways that was privatised? It was once the world's favourite airline. It finished third from bottom the other day as the least favourite airline. And it's not cheap either. Has privatisation been a massive failure? What else can explain the disaster that is Thames Water? 0345 6060 973 is the number. I'm indebted, I have to say, to Paul in Sunbury, he's out of the traps before I'd even finished speaking. Matthew, when companies like Thames Water need to improve the network, they normally borrow capital to invest, but the shareholders have already borrowed to the max for excessive dividend payouts. Paul gets it. Do you? Well, I'm going to turn first for guidance to Ross Clark, columnist at The Spectator, who wrote only yesterday that Thames Water proves privatisation has failed. Good morning to you, Ross.
Good morning, Matthew.
Let's talk briefly about Thames Water and then maybe in a more general view of the privatisation of utilities. Are you surprised by Thames Water's descent into a corporate failure?
No, because it's been going on for a couple of decades, and it's not necessarily the current shareholders, and not necessarily the real villains here. I mean, it's been sort of in hands of various private equity groups who have done, as you said, taken out huge dividends, loaded the company with debt. That seems to be the standard practice of companies which take over some of these public utilities. No, I mean, I'm no socialist. I'm certainly no socialist. There's nothing wrong generally with companies making profits and paying their shareholders dividends. I mean, that's what raises capital to create businesses and so on. But of course, the situation here was very different because these were public corporations whose assets were owned by the taxpayer. They were then sold off sort of rather on the cheap, in my opinion.
Yes.
And then, rather than sort of investing, the companies which bought them decided to sort of sweat the assets and pay themselves large dividends instead. I mean, they haven't. They didn't raise capital to create a business. They were sort of given a business on a plate, if you like.
Can I just ask, because one of the bits that I'm intrigued by is, my dear friend Fergal Sharkey always draws my attention to this, is the businesses, the water companies themselves are just paying themselves money with appears to be no regulatory interference. So should we be pointing the finger at the companies for doing exactly what Joseph Chamberlain thought they would do back in 1884? Or is it actually about the failure of the regulator to hold the companies to account to prevent these situations occurring in the first place?
Yeah, well, the problem is, I mean, we've got a sort of system with the public utilities. We've got a system which is sort of, it's capitalism when things are going well, and then it's socialism when things are going badly.
Yes.
When they're making profits, they want to pay their shareholders, they want to pay their directors huge salaries and bonuses. But when things go badly, they expect a taxpayer bailout. And of course, when you've got something like a water system for London, I mean, you can't just let it go bust. You can't, it's London's water supply. I mean, it has to be propped up somehow.
Is the fact that, I mean, we privatised water companies. The idea of many of the privatisations was going to be to increase competition, but the water companies all exist in effective monopolies, which is one of the great mysteries of executive pay, because I'm seeing executives of water companies earning close to £1 million as salary, huge bonuses on top for doing, I mean, one would imagine when you get bonuses, it's for doing good work. In Thames Water, I can't for the life of me explain how over £10 million in salary and bonuses and perks over the last 4 years. And they're operating monopolies.
Yeah, well, this is the thing. I mean, the utilities are natural monopolies. Now, I mean, you mentioned British Airways earlier. I mean, British Airways is not a monopoly, and
No.
I didn't have any opposition to the privatisation of that company, even though it doesn't exactly provide always the best service. But where you've got water, you've got electricity, gas, and so on. We can't have 5 or 10 sets of wires and pipes leading to our houses because it's just not practical. So what happened on privatisation? I mean, in electricity and gas, of course, was we created this sort of bogus market where we pretend we're buying different electricity from a different company.
Ross,
but actually it's all the same. But in water, we don't even have that. Not for retail customers. I know it's a bit different for business customers. But if you're a retail customer, Thames Water, and you're in London, Thames Water's the only show in town.
It is, Ross. And on top of that, I found out from a little thing I can check on my bill that 1/3 of my bill, just under 1/3 of my bill each quarter, goes to service the debt that they ran up to pay those dividends. And I'm a freshwater campaigner, and seeing the amount of sewage, sanitary, it's just disgraceful. What I'm seeing in our rivers and in our seas, it's just disgraceful. Thank you, Ross Clark from The Spectator. Let's turn now to Professor Ewan McGaughey, Professor of Law at King's College London, specialising in public services and regulated industries. Good morning to you, sir.
Hi, great to be with you.
And you, could I start maybe backwards with this one and ask you how easy it would be to turn Thames Water back into a publicly owned, state-owned company? Is that achievable? I heard Labour, Wes Streeting, was very cool on the idea last night.
Well, it's very easy if the government had the will to do it. And I think, taking a step back, of course, water is an essential service that we all rely upon. But as some of the quotes you gave before from Chamberlain, the way that say that the way our water companies have been run and the way that regulators have let them run has not been for good, clean water and clean beaches and clean rivers. It's been for shareholder profit. So, and I think it is important to stress the role of the regulator. Ofwat is appointed by the Secretary of State. That's the government. And the statutory mandate that they have is to ensure that the water companies get a return on their capital investment. And so the way that they have been run is explicitly, since 1991, for shareholder profit. That's embedded in the law, and the government appoints Ofwat, hasn't been regulating properly, and so the way that you turn this around is we can have nationalisation, we can have restoration of public ownership through what's called the special administration procedure, but the way that the debate is going at the moment is focusing on whether there should be temporary nationalisation. The fact is that this experiment in privatisation of our water and a lot of other public services as well, by the way, has just not worked. In Scotland, we have 10% lower bills. Scottish Water's in public ownership. In Wales, we've got lower leaks, less pollution than anywhere in England. Welsh Water is a non-profit company. So privatising English water is a pariah throughout the world. There are very, very few countries that have privatized to the extent that we have. So it's not just temporary public ownership that we need to be talking about. It's long-term sustainable public ownership.
Just going back to Ofwat, because I'm intrigued by this. I didn't know that sort of looking after the shareholders was written within their sort of their mandate. Should Ofwat be reviewed as well? And I mean, it seems, along with the EA has been starved of cash, and I know it's had problems dealing with the sewage output and confronting the water companies over that. But the regulators themselves, do they need to be reviewed? If we were to improve the regulators, would we see improved privatised water utilities?
Oh, well, so the first question first. So Ofwat's statutory mandate under Section 2 of the Water Industry Act is to secure, among other things, reasonable returns on the capital for shareholders. So that's written into the law. Second thing is that the Secretary of State, as I mentioned, appoints Ofwat, and it's allowed a revolving door to exist. So the ex I beg your pardon, the ex-Ofwat chief executive, Catherine Ross, is now on the board of Thames Water. And of course, you can't be an effective regulator if you
How can that be legal?
If you're then getting a lucrative job in a company that you're meant to regulate. So, there's a fundamental question about whether regulation of natural monopolies can actually work. There can't be real competition. I mean, regulators are meant to try and create competition where the market won't do it easily itself. But here there's just no chance of that. So private ownership simply doesn't make sense. So we've got to be like the 90% of countries in the rest of the world that have public ownership of public services. We've got to be in England again, like Scotland has been for some time. Paris Water was taken back into public ownership about a decade and a half ago. And it's important to see that, just putting things in public ownership doesn't, it's not a magic wand.
No. In fact, I would imagine that Margaret Thatcher would have probably had breaking union strangleholds over our utilities in mind when she was pushing privatisation through, because I think it certainly weakened the unions. Professor Ewan McGaughey there, Professor of Law at King's College London.